Welcome everyone, this is Robert Roy. Welcome to the Market Intelligence Report, which is for the week of September 19, 2022, and is being brought to you this week by TradingU. Now, folks, keep in mind, everything we look at is for educational purposes only. Nothing is meant to be advice or recommendations. Now, with that being said, I've got one thing that I want to focus on today only. $194.03. What? $194.03. Yeah, what do you mean why? Don't you know what that is? Well, that's how much the S&P was down this week. That puts us at about 40 points a day, roughly 200 points, about 40 points a day on average removed to the downside. This is a weekly chart. That last candle is this week, right? Wow. All right, what a crushing hit this week. Now, did we have some recovery today? A little bit, but not enough to say, oh, things are good, right? We gapped down today. And this whole week, if we back it up and look at the entire week, right? If we come right back here into Monday, we gapped up on Monday. So we were in not a true bullish bias, but we were in a bullish bias at that point. It was aggressive to take a bullish entry. We had lower highs, which had also represented lower lows, including today now. I talked about this last evening in the Mastering the Trade with our Power Option Plays team. And that was Monday. Tuesday, we take this massive gap down and just go with a crushing blow. That's where the majority of our move came in on Tuesday. Wednesday, so what happened? We closed below the 618 on Tuesday. Wednesday, we retested the 618 and came back. Yesterday, we pushed up to the 618 yet again, and we failed and tested the lower end of that and that 100-point level, 3,900, and the wick went down below. But what did we do? It's the second time now in the last 2 weeks that we've broke through that 3,900 level, and it's kind of weakening the floor. Every time you walk on that ice, it's getting weaker and weaker because we keep breaking through it. And today, boom, chakalaka, we crush right through that level. We gap down right to our blue zone, right? And we've played there all day long. We went up a little bit lower. We came a little bit higher. But look what happened again. We broke through that next fib line and even the 20% bearish market. We're back at that level again, that 38.55. We're at 38.73.33 right now is closing price. Okay? And there's still some corrections. It's right after the market closed, so we may get a few pennies of correction one way or another. That's okay, right? But we closed right above that blue zone in there because that level at the 38.55 is critical. And then on top of that, we have the 38.64.04 level, which is our Fibonacci level. Both of those combined, blue zone, it's an area of strength. But what did we do? We weakened the ice today. We broke through it. Does that mean we're going to fall and collapse from here? I'm not saying that. But we are in a true bearish bias right now, right? So to take directional bullish trades, unless you have an amazing chart setup and a compelling reason to take that trade bullish, I would be ultra cautious, especially with the Fed. Now, I did not look today, but last evening when we did our Power Options Plays, it's called Mastering the Trade. Anybody that's registered in Power Options Trade Plays comes into this training for free. It's included as part of your subscription. And we go over some very high-level things on how we trade stocks inside of POP, inside our Power Option Plays. And we talked in there, and I said the chances of a 75 basis point hike next week are 75% chance of a hike. Right? And then now what's left? Well, you've got 25% left. Where does that fall? Does it mean we're going to be higher than 75%, lower than 75%? It could be a split. No split. And no lower. 25% chance. And it will change a little by the time we get there. But a 25% chance that we get to a 1-point rate increase. Now, I know there are people out there like Elon Musk stating that we need to see a 1/4-point drop. And from an economic standpoint, the economists that I talk with do not say a cut in interest rates is what we need. They're saying that we haven't done enough, and now we're in this overreaction model. And we get through this, every single Fed governor goes through the same thing. Now, they're not looking at the market. They're not supposed to be looking at the market. They're supposed to focus on the economy, not on the market. The market is secondary. Now, that's all fine and good, but the average person seems to have some cash in the market these days. So maybe they need to focus on that, since people's retirement is based on this. And since the government's not going to give us more money for retirement, we probably need to know what we could do to fix this so we don't see these slides take place. I have a next door neighbor of mine that was, I won't say what he did, but he worked for New York City. And 2007, 2006, he's talking about retirement. 2008 hits, and almost 60% of his portfolio gone. He retired this year on forced retirement based on age. Forced. Now, he had enough to do it this year. He was okay. It came back. But we're talking about from 08 to 22 before he was able to retire. That's because he had money in the market. Now, the Fed had to react in 08, right, and try to play catch up, and it was too late, right? There was nothing they could do. And it took a very long time for us to recover. And if you lose 50% of your portfolio, if you have a $100,000 portfolio and it drops to $50,000, what does it take to get you back to 100%, to 100,000? Well, if you had $100,000 and you dropped to 50, that was a 50% drop. But now to get back to 100, you need a 100% gain. To take 50 up to 100, you're doubling it. It's a 100% gain. It's a heck of a lot harder to gain 50 than it is to lose 50. Okay? Because you're starting with that smaller number. Right? So what are we looking at here this week? I want to see where the Fed comes in next week, where things, level out for us there. But folks, we've got this 3,800 level down below. We've got this 37 and jingle down here. And we need to start calculating the next percentages to the downside of what we're looking at from our highs. And I'm going to do some of that with Fibonacci not this week, the next week. When we get into our inner circle, we're going to actually start calculating not the 20% pullback, but where's our 21? Where's our 34? Right? That's the things we're going to start looking at, because those are the more important levels. Not 20 is just a general number that someone made up one time for no rhyme or reason. Let's use 20. It's double what I can do in one setting with my hands. That's 10. It's easy. I can do that math. It's easy. Right? 17. Oh, that's kind of harder. Right? We don't want to do stuff like that. We will. We're going to do it based on what works, not based on what someone goes, this is the easy way to go. Focus, focus, focus. If we look at the VIX, right? There we go. So VIX, there we go, finalized now. The VIX popped up and pulled back. So we're getting a little more aggressive and it pulled back. And part of that came down to this, what I would call somewhat of a rounding bottom pattern on the S&P today, that even though we didn't get back to where we closed yesterday, we got back near the gap, not all the way, but near it, to where we gapped down. We came in closer proximity to that gap. If you just look at the horizontal line, look over to the right, you'll see the rest of the candles. We got a lot closer back, which is why VIX reacted the way that it did. But it's still at 26.25 right now on VIX. So is it high? No, it's in a normal range, but it is on the higher end of that normal range. All right, there you have it, ladies and gentlemen. Make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Go ahead and follow us along down below. Go ahead and like this video as it shows on YouTube here. And make sure you keep up with all of the most important content that I put out on a regular basis across all of our social platforms. All right, everyone, have a great day, and I will see you at our next one. Bye for now. Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I put together just for you.